mic settings. USB condenser mic, so that's all working. Let me change the banner here at the bottom of the screen. This one. Rows. This one. Alright, there we go. So let me quickly check TradingView and make sure everyone on Discord is aware that we're streaming live. Yep, the event just started. Discord is a little bit laggy when I'm streaming live, but the streams in here are lag free. I made sure of that. And before we get started with the stream, let me see if we have a few people on YouTube already watching. Yes, nice. TradingView chart analysis. All right, it should be going live. Okay, there we are. All right, so the stream will be a little bit delayed on YouTube, but if you want a non-delayed stream and access to the trading setups, feel free. Good morning, host. Let's get the party started. So if you want access to the free streams on Discord and the trading signals that I share on a daily basis, there's a link in the description below to join all that, and then you get access to our VIP section here on Discord. And this morning I already shared awesome trade ideas that actually played out very well. We started off the morning right here with the London 2022 model at 8:29. That's 31 minutes ahead of the New York Open when the overall setup played out. This is what the chart looked back then. I saw the sweep of the Asian sell side liquidity. We had our market structure shift level right here. And a little bit later on at 8:40, we had the market structure shift confirmed with our displacement. I already placed my buy limit. And yeah, we've got filled. Done, first CB hit, and the rest for me personally got stopped at break even. So I have been filled right here. It hit my first take profit target of 5 points, so I got out with a 5-point profit right here on the Asian buy side. Before it retraced, hit my other position at break even, and then continued back to the upside to run out even more buy side liquidity. And after that, we saw a short YouTube model here with our market structure shift right here with our bearish fair value gap. It didn't play out well. It hit some internal sell side liquidity. We didn't end up sweeping this low. Right here, we got filled. And right here, I got out most of my positions somewhere around this level. And the final close happened once I saw this volume imbalance above the New York midnight level. Right here we had a new bullish market structure shift with this candle close, and then I alerted the inversion fair value gap right here. If we close above the bearish fair value gap, we can target longs, higher risk. Partial at 5 points, final target 4404. We hit our first partial. And we also hit the final target of 4404. And a little shout out to Freshkey, one of our community members, who managed to pass his 50k Apex challenge this morning with the 2022 setup that I shared this morning. So well done. He's up 3,375. That's considered a pass for the Apex challenge account. It took him, not even 7 trading days. And because he's working full time, all he did was checking out the trade ideas that I share on a daily basis in here. Let's see, yesterday. Now, we're not going to talk more about that. Now it's time to look at some charts. I already alerted everyone on Twitter and YouTube that the stream is going on, so I will keep an eye on that. All right, so here we are. Let's quickly check Forex Factory. We have core PPI and PPI news at 8:30, and later on during the PM session we have the FOMC meeting minutes. And because we had a awesome Monday and Tuesday trading session, I'm not in a hurry to get into a trade today, to be really honest. I prefer sitting on my hands for most of the time. For right now, prior to the news, all the executions will be paper trading executions. As we can see, if I go to my Bento book journal right here, and go over to my Apex 150k, the current challenge that's ongoing, you can see it's up 2.5% so far after 13 trades. The equity curve is looking very healthy as well, and so far I did not have a losing day, and this week I already hit my weekly objective. I'm almost halfway to passing the challenge, so that's not bad either. Just trying to not mess it up. If I see a good opportunity after the 9:30 open, like a 2022 model, of course I'm going to take it. But if not, I'm just going to see how it goes. I'm not in a hurry to pass the account. Taking it slow, taking only a few trades per day, and then we see how it ends up to see if I pass it. And all right, let's get started. Jump over to TradingView. All right, so here we talked about the inversion fair value gap setup that I alerted on Discord. Here we had the early 2022 model, a retracement. So question, why didn't we continue lower to sweep this low or hit my 5-point target? We had our market structure shift. We pulled back into the inefficiency and we repriced lower, but only into internal sell side liquidity below this low right here. And once I saw this gap to the upside, I was already a bit worried. We continued to sweep that sell side, internal sell side in discount to reprice back into a premium. Then the next candle closed right on midnight and open up with a bullish volume imbalance, and this was it for me for a little. This was the $69 profit that you saw me taking on the 150k for a 1.5 handle move. So we swept sell side in a discount. That's all done. Let me get rid of some drawings that we do not need anymore. Afterwards we had a new displacement, push above this short-term high. We closed above. We kept on holding, like said, in the inversion fair value gap at the 50%. No, not at the 50%. We ticked below it one time right here, where we sort of formed this bull flag formation before we had our next leg up, retraced into our bullish fair value gap. Let me actually make this a bullish fair value gap, and we kept on pushing into our final target. And if I zoom out, the final target was those two equal highs. Now we're inside yesterday's PM session drop. I talked about this drop in my recap. This is where the $800 win comes in on my Bento book yesterday. This short during the PM session. So right now we're inside this area. Trading is a little bit laggy. I'm going to quickly restart that for a lag-free experience. Google Chrome. There we go. Now all it has to do is to load up a little bit quicker. Let me log in. I'm not logging into my trader weight right now, not ahead of the news. So let's do a quick markup. We have PPI and FOMC news today. Group 2. Turn that back on. We have our previous day's high and previous day's low. Yesterday's consequent encouragement of yesterday's range, 50%. We consolidated around that. We're inside this 1 hour fair value gap, but let's get rid of all that. I don't want to see that on my chart at all times. The important one that I'm looking at right now is this bearish fair value gap, and therefore I'm going to slice it up into quarters. Because this is our main level of resistance on our way to the previous day's high buy side liquidity pool. We will see if we can make it through this level and continue the upside expansion. I'm favoring shorts, but we will see about all that. Alright, we discussed everything that happened during the Asian kill zone. Let me see if I can get rid of some lines that are not really necessary. This was our premium discount for the London session. We swept the Asia buy side, we swept this, we had our market structure shift early on. This was our Asia sell side, but we don't need those lines really. Just a visual guide. We have our midnight level. We have the 50% of yesterday's stealing range. That's everything we need. We have our inversion fair value gap. I'm gonna extend that out. And this bullish fair value gap also kept holding support. Trying to stay on the 5-minute time frame for now. Let's see, can I get this accurately lining up? There we go. So we can see we already hit the 50% of this big 5-minute bearish fair value gap. And we swept that sell side. Right now we have a nice trend line liquidity. Maybe engineering liquidity ahead of news. So I'm going to get a visual representation of our news, and at 2 p.m. all the way over here. And then also for the 9:30 opening. Now I think we have everything outlined. That's going to play an important role. I also want to keep track of this bullish fair value gap. We kept holding support so far. I do not like this fair value gap, even though it delivered into buy side. We haven't respected it afterwards, so I'm only going to be looking at the ones where we actually kept holding from. We swept this low here already. And made a lower high, made a lower low, and another lower high compared to this one. So if we can break below it one more time, we would sort of have a 3 drives pattern. This could also be viewed as a market structure shift if we drop time frames to the 1 minute. Pump, last low before we delivered into buy side, shifted market structure, left behind the fair value gap, and maybe now ready to continue lower. I'm gonna be looking at this little volume imbalance here, but I'm gonna use a box. This is currently rejecting price from going higher. We have our order block, and talking about order blocks, I have also just released, let me head over to YouTube here, just released a new video regarding order blocks. So if you go to my YouTube channel, come on, load up, would you? I just released the ICT for Beginners 5 order blocks, simplified. And the mitigation blocks video is coming up on Friday. On Monday, I released the breaker blocks simplified, the free drives pattern already 9 days ago, the SilverBullet setup, and the first initial video was the 2022 mentorship, my favorite model. But all these new videos, breaker blocks, mitigation blocks, and order blocks are important for the 2022 model as well. So yeah, this was yesterday's recap from the short that I took. The weekly outlook, I already hit all my weekly outlook targets on Monday, Tuesday, so I'm kind of looking for shorts here right now. But let's see. If you guys have any questions, feel free to ask me. And let's open up TradingView again. Alright, I think in terms of fair value gaps, we have it all covered. Yep, we do. This could end up as a potential order block. It is 8:10 a.m. I think I'm going to fill up my water bottle here and be back in no time. Let's see how this plays out. I'm going to log into paper trading. Head over to the Apex 50K. So even though I'm a well-seasoned trader and I know how to use ICT-Concepts, I still do enjoy paper trading because it's my laboratory. Like, even if you're a pro soccer, NBA, whatever player, athlete basically, you still practice and you don't do it during a live game. If the coach wants to try out something new, a new concept, blah, 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 you try that out in a simulated environment, like practice, soccer practice, basketball practice, whatever it is, doesn't matter. The main point I'm trying to make is that trading on a paper trading account is still beneficial, more than you would think. I know it's not counting towards any challenge. That's not the goal here. We try to be consistent with our challenges, and since I've already hit the weekly objective for my 150k account, 1,374, more than I made last week and more than I made during week 1. I'm pretty content with that. Unless I see a really clean setup, of course. Right now the account is up almost 4k. The profit target is 9k. So it's still a little bit further away, but with this current equity growth, I started the account on the 29th. Today is the 11th. So that has been 1, 2, 3, 4, 5, 6, 7, 8. Yeah, not even 10 trading days. So I think I'm doing pretty good. Alright, I'm gonna fill up my water bottle and I will be back. If you guys have any questions, feel free to send me them, ask me in the chat right here. And if not, enjoy the stream. I'd be interested to know if anyone already took some trades today, maybe this London session 2022 model that I alerted to all the VIP members on my Discord server, or maybe even this short into internal sell-side liquidity, or this inversion fair value gap play. But other than that, or maybe this continuation entry of this bullish fair value gap, I don't think we had that many opportunities today. We swept Asia sell side after ranging during Asia, shifted structure, bullish fair value gap, breaker block, continued into buy side, had a retracement into internal sell side without clearing the London session low. And while talking about it, it might be good for us to mark up our liquidity. This is our London sell side. I want this in 12 bottom right. Where did we open up? I also want to be aware of that. This is our open. This is all clear. This is clear. No, I'm gonna leave this line on. Nice equal lows here. No, don't need it. We already have external on our chart. It is 2:18, so still 12 minutes until we hit news. And other than that, let me quickly turn on the historical standard deviations. Plus 0.5 would be up here. Negative 0.5 would almost line up with the previous day's low, previous day's high. Quickly check the DR because I know there are many DR traders out there, even though I don't really use it. I mean, today it gave a early wick confirmation short and then still went long. But yeah, this is pretty much the same analysis that I did without having it turned on really. I do not care about it. I just turn it on sometimes because viewers on the stream want me to turn it on. I already mentioned the long of this inversion fair value gap right here. So yeah, from here on, I think we have everything on our chart. We leave it like this. We have our high, low, and open. This is currently the closing price for the daily candle. As a visual aid, we can turn on the daily candle too. That is the weekly candle. Weekly candle is hella bullish. That's a daily candle, so we leave that on. As a little visual aid. And also draw our London session box, and this time I'm really going to make it to fill up my water bottle. 5 AM New York local time. This is our London session range over till 2 AM. We make this blue and this blue one thickness. We give it some more opacity or less opacity to actually see the candles on the side. We measure the range from our London kill zone. 12 points, so relatively small range. Top left, make it 12 and black. 12 points. Afterwards we continue to expand. And right now we are, relatively speaking, at the high of the day, above the 50% of yesterday's range, inside or just rejected from our bearish inefficiency up here before we could potentially reach the previous day's high. Alright guys, I'll be back in no time. Let's see if we got some questions so far. You took a short, Kira. From where, actually? This short? With this bearish fair value gap? All right. Okay, so you took it on EU. Yeah, EU also had a nice setup. I'm currently looking at it. But in terms of ranges, not ideal. I took a small loss here, testing a new system. See how it performs. Right now I would have to adjust that. Ooh, high. Low. We went lower, so this is my current range. My PD array. Keeping an eye on that while focusing on ES. That's just irritating for me, having this power of 3 indicator on here. That's why I have all these indicators disabled. I could leave this one on. But even that, I don't like anything on my chart. I prefer it that way. No, not even my session indicator. DR is pretty useless. Not looking at it anyway. No, let's leave it like that. Let's see if Freshkey can make it to our live stream. He might be at work, but he's the one who passed his Apex Funded account this morning. I already talked about that, but we had barely any viewers by using the trade ideas that I share on a daily basis inside our VIP area, especially the 2022 models. This morning we already had one that played out, the other one hit sell side, but most of it for me got stopped out at break even. Right here, this was the long 2022 model, 30 minutes before New York Open. And then we shifted structure. This was my main trade today on my funded account. Retraced, hit my breaker block, inversion fair value gap entry, secured Asia buy side, and then afterwards we had this little stop out wick back inside, back towards my break even level, and yeah, I got out of the position, watching it continue further to the upside. To be honest, the reason I moved my stop to break even is because we had such a narrow Asia range, and I was afraid of potential seek and destroy environment. So right here we had this tight Asia range, we swept the low, swept the high, and I really expected after this MSS here to the downside that we could continue lower of this initial bearish fair value gap to run sell side. But we there we go. Sorry guys. But we got rejected after sweeping internal sell side right here. If we use our little PD array, premium, discount. If we look for higher prices, we want sell side swept in a discount. And we did exactly that. And then we we rejected from this level, next up closing candle without an upper wick, followed by a volume imbalance above the New York midnight level. And I got out of my position right here at the midnight level. This is this little $69 win that you see on my bento book for today. 50k is up to 50. I used one micro contract, got in on the breaker block right here, and secured most of it at the Asian buy side. Then I got stopped out right here. We continued higher anyway, displaced, and I was ready to take another trade, see how it goes on my 150k account. It played out really well initially, but then I saw price really struggling to break lower. And yesterday we did something really similar, and it just shot up afterwards. So with this volume imbalance, I took an early exit. I could have also reversed my position really, but this is hindsight. and I don't pretend that I know it all and know what the market is going to do at every time. I'm just presenting a narrative to, view price action from a different perspective using ICT concepts. Not all the ICT concepts, I only use fair value gaps and inversion fair value gaps with my own little twist. I'm not following ICT anymore or watching his new videos, blah blah blah, or his rants or religious speeches about God. I could care less. I still think he's bipolar and I don't know, maybe even a fraud. Who knows? But I don't care. I made them work for me. And yeah, I'm trying to share that here with these daily live streams. Let's see if we can break the low and close below our bullish fair value gap that kept holding so far. This 8:25, so in 2 minutes we actually get news as well. And to continue higher, I would be looking for longs in a discount. If we don't reverse for London sell side, and lows and discount would happen, from these levels right here. I think that makes sense. Inside this green area, this is a discount. This is, relatively speaking, cheap. To sell at a higher price level, expensive. So this is the current daily dealing range. I'm gonna leave that on here. No, I don't like it. Trying to be as minimalistic as possible. Everyone saw it. We have the 50%. This low is below the 50%. So if we want to reprice lower, this low right here, this low right here would be a potential target. And if we see we aggressively break below the 50% and put in more bearish structure, we could look for London sell side to be taken. 15 seconds until news. We seem to be holding still. This is going to be core PPI and PPI news. Let's see. News candle comes in and we drop. We sweep sell side and discount. We sweep more sell side and discount. Let's see if price wants to remain bullish and hold the inversion here to continue up higher. We talked about the potential for this drop with this 1 minute market structure shift and this bearish fair value gap, volume imbalance that kept holding resistance perfectly, played out. We had reason to believe that we will retrace. We had this little trend line right here going up. We hit the 5 minute bearish fair value gap from yesterday's PM session drop, hit the 50%, and now we retrace back into a discount. And this is really make or break. Do we want to continue higher and they have Houston news to reprice aggressively into that discount and stop out all the potential longs that might have kept on holding towards the previous day's high ahead of news? I don't know. We will see. I think we're bound to find out. So let's draw it again. 50%. We're below that right now. And we're holding up after having swept that sell side. And if we take a close look, we have a old unfilled bullish fair value gap down here. And we also just hit that. Paired with the midnight level. Check out the 1 minute. Let me redraw my lines so they match up. I can't have that on my chart when it's not tidy. Especially my object tree over here. And I don't even have these levels. Hang on. That belongs into group 2. The fib retracement as well. Then I can quickly hide and unhide everything if I want to. But right now I want to see all that. So on a 1 minute time frame, we repriced into a discount. We left behind a 1 minute bearish fair value gap. If we displace back above this high, I would be actively looking for longs. Right now, my main interest lays in this bearish fair value gap. I want to see if it holds resistance or if we push above it, hold support and continue into more buy side after having swept sell side and discount. If we start to respect this, as you can see, we already filled it to the tick and we're starting to reject. We can expect more sell side to be hit. And potentially this high could end up as the high of the daily candle today. Keep in mind we have FOMC meeting minutes news at 2 p.m. New York local time. We already had a pretty good week, so no reason to give profits away. Check the 5 minute. On the 5 minute, we're starting to get a strong rejection. Anything new on YouTube? Any questions? Usually 10 to 15 minutes after news release, but it depends. If I see a setup earlier with enough reasoning to back my theory up, I take that. But I think for now it's gonna be paper executions. Let's see, how big is this range? 10 points. Yeah, I want to see what we do inside this 1 minute bearish fair value gap. And then I make a decision. Because if our bias remains bullish for the day, we just swept sell side in discount. We talked about that. Our premium discount for the day. We swept sell side. And we left behind a 1 minute news candle inefficiency. We're either going to hold that and continue to deliver lower, or we push above it. Kinda, yeah, in between right now. I'm not really sure if we continue higher or lower. Both scenarios, of course, could play out. So we swept sell side, we immediately rejected. Not good enough for me personally, especially just after the news release, to take a trade on my 150k account. Funded accounts already in profit today. I don't think I will be touching that today. We'll see. Unless I get a nice SilverBullet setup later on after the 9:30 open, I think I refrain. Alright, so 40 seconds to go before this candle is going to close, and we're pushing above our 1 minute bearish fair value gap. This is practice. There's nothing wrong about practicing on a paper account. Professional athletes practice 4 or 5 times per day, per week. And then I have one important match on the weekend usually. We don't trade weekends, unless you trade crypto on the weekends. I don't. I want to get the hell away from trading on the weekends. Alright, so we closed above. This is the confirmation for me that we want to seek buy side. We might not even get an entry opportunity, but I hope you guys understand why we expected this. We talked about sweeping sell side in premium discount before we hit news. We saw the sell side we outlined has been taken. And then we started to immediately get a pushback up with a volume imbalance. And if we drop it down to the 1 minute, we can clearly see this playing out. So right now I would be looking for the 4408 level. The displacement is in kind of a order block setup right here. We swept sell side on that candle. But yeah, I still would like to see more confluence, because I'm not the biggest fan of taking an entry here. Stop loss would be rather big. And there we go. So we just swept some more internal buy side with this last push up. Good idea to, for now, stay away. So we're inside the 1 minute inversion now. This is make or break really, since we just swept some buy side and strongly rejected with a bearish volume imbalance down. I think the news event hasn't fully played out yet. That's why it's a good approach to wait 15 minutes if you're not 100% sure. Sometimes you just have that gut feeling, and then it's fine with me. Sometimes I do take trades ahead of news because the volatility sort of enables my trade, the potential. But only sometimes. Won't be taking any trades on EU. So we close back below our 1 minute inversion. We close above. Now we're back to closing below, opening up with a little gap. Not ideal. Even if we push back to the upside right now, I wouldn't really like that. I would prefer to actually respect the PD arrays it puts in place. If I don't see it being respected, I avoid engaging. We have unfilled volume imbalance. We close below that. So theoretically, let's try a short right here. Of this newly formed inversion, I'm going to place my stop loss, 20 ticks, 5 points, and my take profit target is going to be the midnight level. Let's see how that plays out. This is just a paper trade. Since we swept more buy side, we didn't continue to hold the 1 minute fair value gap. Let's see, we still have this rejection wick here, so volatility after the injection of liquidity at 8:30 isn't done yet. I could be wrong about this, so this is not financial advice at all. Please don't take this trade. There's a reason I take this on a paper account. We have a new 1 minute bearish fair value gap coupled with our old 8:30 inversion fair value gap. Well, tough one right here because we close above and close below, so it's not really an inversion, it's just a fair value gap that hasn't really been respected. But we're pushing lower from it. Nice rejection on this 5 minute bearish candle. We came all the way back up into buy side, all these equal highs, and rejected once more from our 5 minute bearish fair value gap from the PM session drop. Over here, let's see. Let me check out YouTube. Yes. Since this PPI release soon, how soon would you consider? I already replied to that. Yes, especially for different strategies. Yes. There's so many ways to trade these markets, and in the end of the day, it doesn't matter which strategy you use. The only important thing is that it should align to your personality. Like if you try to copy someone else's system, most of the time it doesn't work. It doesn't mean that the system doesn't work. It only means that it doesn't work for you. Because if you watch someone on YouTube who's trading live, they have put in the time and effort to develop their own methodology. And they maybe created indicators based on that, like the Vinny E-Mini Algo box. I just heard about that recently. He's selling that for 5K or something. People buy that for 5K because they expect it to work because it's so damn expensive. But really all it is, it's an algo that works really well with the way he is trading. So it works well for him. Doesn't have to mean it's going to work well for you. You have to put in the time, put in that hard work, and find out what works for you. What suits your personality. For me, that's quick in and outs. I have the eyes of a swing trader. Like this Asia model down here, but sometimes, especially on the lower time frames, the patience of a scalper. I get in, get my 5 points, and I'm done. I'm happy with that, even though my analysis often plays out to, turn out to be the low or high of the current session. Like, for example, the short from yesterday. Yesterday I did a good job with holding. I got out at the 50% with most of my positions. That $800 short on my bento book, but still, it's all about you. In the end of the day, ICT-Concepts might work for one trader and they might not work for the other trader in the room because it's you making it work. So we hit our 1 minute bearish fair value gap now. Let's see. We also put in place a new 1 minute bullish. Hard to frame here. So far all the candle bodies, I'm only respecting the bodies right now if I'm talking about this, stayed inside this 830 range if we only respect the bodies. Haven't expanded outside of it yet. So right now, this is our guesswork where price is going to go. We are roughly at the 50% of today's dealing range from low to high. We already looked at that. Low to high, 50%. We actually haven't closed below it here on the 5. So while we still could bounce, we could also easily frame a trade against that. And those are the opportunities I don't really like to engage in with my funded accounts. While this opportunity down here, Asia consolidated, we had our daily opening, we sweep the low, we get a structure shift. Okay, what's it gonna do? Of course, we could still most of the time frame a short, but the odds are really in our favor because we're at the low of the day. We look for a long into buy side liquidity above all these highs playing out. And I think it's a higher probability than something inside at the 50% of today's range. We're not at the extremes. We're not trying to frame a short at the high or a long at the low. So hope that makes sense. We open up with a 5 minute bullish volume imbalance. Let's keep an eye on that. Go back to our 1 minute time frame. If you guys don't mind, I'd really appreciate it if you hit the like button. That would really help the stream out. And put more, or like, so more people can find it basically. And maybe gain some value. Alright, so we keep on pushing. We don't respect this bearish fair value gap and immediately push back above it, close above it. I'm going to cancel this little paper trade. I still take it seriously, as you can see. I mean, I even named it Apex 50k. And it's currently running in profit because I'm practicing for my real Apex accounts. Like this. We have a unfilled volume imbalance here, but inside that is just guesswork. Let me tidy up my lines here. You see 830 open as reference level. And we seem to be respecting the bearish fair value gap. Open up with a new 1 minute bearish. Let's see, nothing really clear here as of right now. Let's check Forex Factory here. quickly for the outcome of the PPI news. I don't think PPI is gonna have a major impact. Numbers or CPI numbers on Thursday gonna decide how this week is going to close. And since we hit, I mean, if you watch the weekly outlook that I uploaded on YouTube on Sunday, I really recommend you to watch it, even though it's the middle of the week already. It just helps for your higher time frame analysis. And on that outlook, I was looking to see orders buy side that we cleared yesterday with this big rally to the upside. We hit the daily bearish fair value gap. Let me turn that on. That's the daily bearish fair value gap. We hit a weekly new week opening gap and all that. We hit the weekly +1 standard deviation. So good reasoning to believe that we could retrace to at least the 50% of yesterday's range. That's exactly where my short originated from. I talked about that in the recap for yesterday's price action. And yeah, I was looking for these targets during this week. But yeah, what I didn't expect was these targets to be hit on Tuesday. Because on Monday we were supposed to have a bank holiday, and on Tuesday we had no news. We had the entire news schedule ahead of us. Let's see, looks like we're pushing up. So this is why I was kind of surprised that we hit orders buy side already by Tuesday. I kind of expected Monday, Tuesday to trend to the downside, hit the 4 1 hour order block, and then Wednesday, Thursday, low of the week, on Wednesday or maybe Tuesday, and a run up on CPI. But yeah, well, CPI is still ahead of us, and we already hit all these levels, which is making it a little bit harder. I was still able to capitalize on the moves to the up and down side on Monday, Tuesday. But yeah, I hope you guys know what I'm trying to say here. Definitely good practice to watch it for the higher time frame analysis. And if we check out Forex Factory to see the impact, we forecasted 0.2 and we actually had a higher percentage. PPI, that's the price of finished goods and services sold by producers, excluding food and energy. Actual greater than forecast is good for the currency. So good for the currency means good for the US dollar. Theoretically bad for everything that's measured against the US dollar, like gold USD, Euro USD, and even stocks, because every stock is measured against the US dollar. And since we're trading the index, also the future index. DXY likely went up. Let's pull up the DXY chart here. Have something to do. Let this paper trade rock. All. This was NFP on Friday. Whipsaw, pump up, dump down, sweep some buy side. And right now we're sort of going sideways at the extreme. If I really zoom out here, we swept the sell side. We would theoretically have more sell side below us. We had this pretty strong trend starting early August. And right now, based on a daily, this could become our change in state of delivery. High, higher low, higher high, lower low, confirmed by a daily close. So we could be drawing in our breaker block based on a daily. Our inversion fair value gap, since we do not have any fair value gaps on the right side. Come on. Breaker block, but only if we get the confirmation close below, which could help, yeah, the foreign currencies and the stocks to rally. Sell side, sell side, and sell side if we use, like always, our premium and discount tool. We see sell side and discount would be this one right here and these relative equal lows down here. Bum. Bum. Make that match up. Let's drop down to the 4 hour. On the 4 hour, we're in bearish market structure. We swept the sell side. In terms of breaker block, we could refine it to the most recent lowest down closing candles, those ones right here. If you don't know really how to draw a correct breaker block, today I uploaded a new video on my YouTube channel regarding breaker blocks, so make sure to watch that. I also included a NFP week example that helped me to capture this entire move to the upside on Monday. No. So we closed above our bearish fair value gap here. Like I said, I'm going to exit my paper trade early on. We left the 830 range. We closed back above it here on the 1 minute. But the 1 minute is starting to get a little bit messy. So I'm going back to watching the 5. 1, 2, 3. Swept the high. Started to consolidate. But price obviously doesn't want to push lower, at least for right now. So not much we can do right now. Let's get back to the DXY top-down analysis. This is our breaker block. This is our daily inversion. Trying to refine all these levels. Blah, 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 blah. Lower low, lower high, lower low, lower high. We swept that sell side liquidity right here this morning during the London session. But we want to see a close below. If we drop down to 1 hour, we're in a tight range down here. We'll see what happens. But other than that, I mean, we have our daily time frame analysis, and that sort of outweighs everything on the lower time frame, where we could see a potential change in state of delivery for a retracement to pick up some sell side to continue the journey back up. We will see. We can't just continue to expect that prices are going up. And since we already swept this major daily sell side early this morning, could also see a little retracement back to the upside or a further expansion down. Any major fair value gaps that we have closed above or below? Reprice into a discount of this range. We're already at the 50%. Overall, I'd expect lower prices over the next few weeks on the DXY, which could help us to pump on our indices and foreign currency pairs. We failed to close above the 830 level. We are going to keep an eye on that. Let's see. Any questions on YouTube? Thanks for all the likes, guys. Appreciate it. Feel free to ask me any questions. That's why we're doing these live streams, or why I'm doing these live streams. Also, for everyone on the private Discord, feel free to ask me any questions. Right now, it's just sitting in here waiting for the New York Open. Not really interested in placing any trades. Right now, I lean towards longs because we swept sell side and discount of the daily dealing range. We had a strong pushback up. We almost finished the V-shaped recovery. Buy side resides above this high and the current high of the daily candle right here. If we drop down to a 1 minute time frame, you see we started to disrespect this bearish fair value gap paired with the inversion right here. We slowly but surely push away from it. For longs, what I would like to see first is a close above the 50% of this big bearish fair value gap. Could fuel a run towards the previous day's high. London already swept the Asian session lows, and post-London swept the London session high. Asia was a range. We'll see. We'll see. Too early to make any predictions here. And I'm not going to continue to execute on the 1 minute. Trying to stay away from it as much as I can. I think you have a much easier time getting your ideas from the higher time frame and then maybe execute them on the 1 minute time frame, but it offers the potential for you to get stuck on the 1 minute and you take your first loss and then you look for a revenge trade entry on the 1 minute, which is very likely not going to play out. So even during practice, I try to stay away from it as good as I possibly can. That's what I don't like about ICT recently. I think yesterday he dropped down to even a 15-second chart. I mean, yeah, it might work for some of you, but I know for sure that it's not going to work for me. Because if I start gambling on low time frames, I know that I won't stop. That's this little vicious circle, spiraling down until the account is gone. Been there, done that, no need to do it again. Alright, there goes buy side liquidity. So eventually it played out. We swept sell side and discount and we had our strong push back up right here. I would have liked to see actually this inversion fair value gap to be respected, but well, we had this retracement back below it. So not A plus plus plus. Let's go back to the 5 minute. Really no reason to stay on the 1 minute. Buy side liquidity has been taken. We formed a new high of the day. We're back at the high of the day. Middle, center. That's done. Let's see how we close here. We have that consequent encouragement. Few ticks away from us, right here at 4408.5. If we continue to go higher, I don't know, it's still a tough one. We hit most of my objectives for the week already with yesterday's pump into the new week opening gap, daily bearish fair value gap, weekly bearish fair value gap, 50% of our weekly range. I could go on so many 1 standard deviation of the historical standard deviations for the weekly time frame. We only hit that on, it's a long time ago that we hit our +1 standard deviation on the weekly on Tuesday. We only do that in rare cases where we have a very strong expansion week. We might be in that week, but I think to really continue higher, we have to reprice into weekly discount, which for me is down here. I measure from the high on Tuesday to the low on Monday. Premium discount, 50%, lines up with the sell side liquidity right here and the previous day slow, where we also have equal lows right here. Let's see, I kind of like this rejection here. Let's wait for this candle to close. That's why you should take partials on buy side or at buy side, because you never know if it's going to continue higher. You don't want to end up being exit liquidity. It's a new hourly opening. That's likely why we had this run-on stops here. Went past me. I try to stay ahead of time as much as I can, but sometimes I miss the important things. It's not really important right now because I'm not really trying to force a setup. So let's see how this 5-minute candle is going to close. 5 minute. $8:30 news, we pumped above the London buy side liquidity and also above the session high on the DXY. And we displaced to the downside, which theoretically should lead to higher prices on ES. That might have been a reason. So we had that initial drop on the futures because we had that spike on DXY. But I don't usually use DXY or any other charts as confluence in terms of divergence or blah blah blah. I do much better if I just focus on one chart, and this is why 99% of the time I only have one chart open. Sometimes I take a quick look at NQ to see what NQ is up to, and as we can see, we're still below this high. Right now we have bearish SMT divergence to NQ. But NQ did the same thing, it swept sell side in discount. And actually I didn't see it this morning. Interesting. Hang on, I have to send that to my buddy. You see this bullish SMT divergence paired with the inversion fair value gap? If I would have looked at NQ this morning, this would have made me really confident on playing this inversion. Good morning, Ragnar. Or good afternoon. Pick up some stops, push up higher. No, not with me, not this morning. If I do not see anything clean, no fair value gaps on the 5, I don't engage. Okay, we still respected this one right here with candle bodies, so I'm going to keep it on the chart. Our fair value gap. bullish SMT divergence this morning with NQ. Has NQ cleared the high yet? No, not yet. I'm gonna add an alert here. Check out the 15-minute quickly. Reprice and discount, strong bullish engulfing with no wick to the upside. Reprice into this order block for the continuation higher. I like the 15 here really. Let me also take a look at the 1 hour. We're inside this 1 hour bearish fair value gap. And here you can really see how how well it aligns with this 5-minute bearish one. So I think, 15-minute, 1 hour, and 5-minute bearish fair value gap. We're playing inside of that, that's why I have it marked up. This is our resistance level that's holding us away, or keeping us away from our previous day's high buy side liquidity pool, high of the week as well. For an early confirmation, I'd like to see a candle close above the 50%. Right now, every time we touch it, we reject. We touch it, we reject, touch it, and reject. So if we continue higher, we could expect maybe a continuation of any of these bullish fair value gaps. So basically this bullish fair value gap inside here from the 903 candle high to the 905 candle low. This one right here, this inefficiency. We swept sell side with this drop to the downside. This plays back up, making this kind of an order block. But I'm still afraid this is lower probability. Going to wait for the New York Open. No new questions. Like I said, feel free to ask me. Also for everyone on Discord, any questions regarding any chart or any trade you took to, like, I don't know, for a piece of advice or just looking at it overall, feel free to ask. Not gonna attack you, not gonna bite. So we rejected here on 5. 15-minute candle is gonna give us the close in 5. So if this next 5-minute candle can close above the 50% level, this would be nice to see, because then we would actually have a close above on the 5, 15 and 1 minute time frame. Let's see if we can get that. If not, well, I don't know, we're slowly repricing lower again. We're still, now we have repriced this entire bullish fair value gap here on the 1 minute. Going to try that paper trade. Stop loss goes below the slow, and take profit target is gonna go 14 ticks. Let's try the high of the range, go back to the 5. So if this 1 minute fair value gap is going to hold us, the reasoning here is we picked up stops, we displaced back to the upside, so theoretically we already swept buy side, which is making it a lower probability trade really. If we would have failed to clear this high and continued lower to reprice into a bullish fair value gap, more likely, but we swept sell side with this displacement to the downside, making this sort of an order block for me inside the range. And just in general, as a rule of thumb for you, this is why it's a paper trade and I'm not logged into my TraderWeight account. Going long at the current high of the daily candle has a lower probability than going long at, for example, the 2022 model during the London session right here, or that bullish SMT divergence that we saw between ES and NQ. Higher probability, lower probability. Because we have lots of room to the downside and less room to the upside, while on the other hand here we have more room to the upside and cleared most of the important targets to the downside. Right here we swept the Asia low, we swept the current low of the daily candle. Let me actually, calendar week 41, turn that back on here, the daily opening, low of the daily candle. Up until then, imagine, okay, we seem to be breaking up here, doesn't matter. Imagine all this didn't happen yet, and try to imagine what the daily candle or higher time frame candles look like at this point in time. Doji, we had a tight Asia consolidation range. The current low of the day was right here at this level, and we had more sell side liquidity one tick below it, so we can really speak about relative equal lows here relative to each other. And then London opened up at 2 a.m, hit this low, swept these two lows right here, the current low of the day, made a new lower high, and then for a last time had this last push below this major sell side and left behind a pin bar candle. And that's when I gave out the alert on Discord right here for the trade ideas. Up here. Potential 2022 model. I saw this nice little liquidity rate, up closing candle. We continued higher and actually displaced, placed my limit orders, and throughout the London Open it played out really nice. I got stopped out with the second contract at break even, really, because I trailed my stop loss. Wasn't a big fan of this tight Asia range. Expected it sort of to clear the high and then maybe pull back into the range. You never know, but yeah, sometimes you have that feeling, and then I tend to trust it more times than I don't. So this played out really well, and Freshkey actually managed to pass his new funded account challenge with the trade ideas that I share daily in less than 7 days. Yeah, that's not bad. But let's get back to current PA. We get stopped out. So this 1 minute bullish fair value gap obviously didn't hold us. Like said, lower probability at the high of the day. We swept buy side one more time. We could take a quick look at NQ. You can see that that bearish SMT divergence is still in play overall, because NQ did not go above the 7:30 a.m. high, and now we're starting to sell off, powered by the bearish SMT divergence. And we can confirm bearish order for these volume imbalances that price is leaving behind. But I don't know, it's hard to trust any of that. That's why I'm not ready to engage yet. I'm gonna wait for the New York Open. We also have FOMC meeting minutes news at 2 p.m. We could build up liquidity for the PM session later on. We will see. Go back to the 5 minute. Buy side, buy side, buy side. Evening star formation. Swept buy side one more time here. Pulled back. Only have this volume imbalance down here. Still no 5 minute fair value gaps. Did manage to close above the 50%, going up to the 15. Barcoding going sideways. We cleared both sell side and buy side, but only external buy side and internal sell side. If we look at daily range, might make more sense of what I'm talking about, internal, external. So prior to the 8:30 news, we cleared internal sell side. External would be down here, the London sell side liquidity pool. And after sweeping that internal, we move into external, the current high of the day, sweep that, and right now we're on our way back to the 50%. Good call, not trying to engage live. Did anyone take a trade so far yet this AM session? I hope no one copied my paper trades. That's a reason I'm on paper trading. Can't stress it enough. And this is overall not financial advice, just presenting a narrative. We have that SMT divergence with NQ. We shifted structure right here. We had our fair value gap paired with the breaker block. We retraced into that. We could use that to deliver lower now. If you're not sure what I'm talking about, this would be the breaker block. This entire down closing candle, lowest down closing candle, paired with a bearish fair value gap down here. Of this higher time frame, 1 hour, 15 minute, 5 minute bearish fair value gap. Took buy side one more time, bearish SMT divergence. We broke below the low, so right here we had our market structure shift. Confirmed with a candle close right here on this candle. Pulled back into the breaker, paired with the bearish fair value gap. So far, didn't continue lower by that much. We will see. MSS bearish. Because yet again, we're back inside our 830 range. 30 seconds for this 5-minute candle to close. Let's see if we leave this volume imbalance open or if we fill it in. For shorts, I prefer to remain open. But seems to me like we're gonna fill it in. 10 seconds to go. Now we left it open. 15 minute. Also a bearish volume imbalance on the 15. 10 more minutes until the New York Open. 1 minute time frame. It's trying to touch that level, but I'm afraid we will get burned more. Count history. Already down 400 on my simulated challenge. Sorry guys. Not really interested in giving away more prior to the New York Open. The interesting part is that we now have our first 5-minute bearish fair value gap right here. We haven't confirmed the market structure shift with a candle close below it yet. We only had this volume imbalance and we closed right at it. But 5 points. This is a pretty decent risk to reward ratio. If we fill that 5-minute, I take a paper trade shot into the New York Open. Let's quickly double check on NQ. Double check on the 1 minute. This is our 5-minute. We do not have anything on the 1 minute here other than this breaker block. This is our fractal ahead of the 9:30 opening. Not the safest trade to take, I'd say. no new questions, feel free to ask me, to everyone that's watching on YouTube. And also, you, Kuchen Ragnar, feel free to ask anything. Right now it's me sort of forcing a setup so we have something to watch and talk about here on the 5 1-minute time frame. That's why it's paper trading. One minute, high of the day, short. 5-minute bearish fair value gap. News later on. They're holding it back for the New York Open in 7 minutes. So let's wait and see. Is anyone reading a good book at the moment regarding, like, I don't know, self-development or anything that is related to trading? If so, like, share it with me. I'm looking for a new book. I just started the book called, oh, god damn it, started it today, can't even remember the name. Yeah, there we go. The Mountain is You. This one right here. Let's see. Wait, ChatGPT. Self-sabotage, or transforming self-sabotage into self-mastery. I don't know, the title really aligned with me. I don't know, because as a trader, really there's nothing in your way from, I don't know, acquiring a couple millions in funding and getting these big payouts other than yourself. It's that mountain in front of you, which most of the time is self-sabotage, or yeah, you're just not being confident enough or trusting that you can actually do it. Maybe not consciously, but unconsciously. And yeah, our subconscious is, our conscious brain is only, what was it? I read it in a book today. Only responsible for 5% of what we actually process. And the other 95% or 90% is actually, yeah, the subconscious, the thing we, or the part we can't really control. It's just there. So yeah, I don't know. That title really resonated with me. I saw it on Twitter and I decided to get the book. Reading into it. Alright, so we filled on our 5-minute bearish fair value gap. Let's see how that holds up. The next candle is going to be the New York opening candle. This is a paper trade, not financial advice. Just want to make sure no one's getting engaged here ahead of the New York Open. Wouldn't recommend it. I think you still didn't clear that high, while ES did. That doesn't mean that the New York Open can't push into it. We repriced into a discount using the 8:30 news. We already pushed into a premium despite side liquidity afterwards. We didn't do that on NQ here, but NQ could simply make that push since it also swept already internal sell side, and also this 2 a.m. low, current low of the daily candle 18 right here, and also the low of the day. Yeah, but back to focusing on one chart. 2 minutes to go until the New York Open. Let's see. Our current daily candle, open, low, high, and the current close. Bullish as of right now, but we know how quickly that can change. One minute to go. Last minute of this 5:15 minute candle, also 30 minute. Everything that's easily divided by 5. Let's see how we close here. And if we put a high in place already to reprice lower, or scenario bullish would be, we already repriced lower. This is just a pullback into the range from this low to this high to continue up even higher. We'll find out in 15 seconds. Open up with a bullish volume imbalance. Initial momentum seems to be bullish. We have our alert on NQ. NQ is also pushing. Yeah. Sometimes what I like to do is I invert the chart because, I don't know, you get a different perspective on price action really. And that's all I'm looking for. Yeah, just gonna let this stop me out. And you immediately start to look at price in a completely different way. At least I do. Like you look at this, everything's bullish, and then flipping it on its head sometimes help me to double confirm my bias if it's correct or not, if I think it is correct. And right now it sort of points more to orders buy sell side, sorry, because it's inverted here. So NQ swept the high now. Boom, above it. Let's see if ES can follow. And that's an example why you should avoid to predict the New York opening. Sometimes it works, sometimes it doesn't. Maybe if you have a strategy built around it, you can do that. I don't. Alright, so we are above the high again here. Solid longs are still in play. And once again, close above the 50% or this bullish fair value gap, bearish fair value gap here. If we want to reprice higher to the previous day's high. Let me check the regular trading hours. We can see that we have a opening gap right here, open right here. What did we have yesterday? Yesterday we had a gap as well, but we immediately filled it right here, almost completely, before we had the rally. So maybe today we get a pump up, a fake out Judas swing to the upside, and then a continuation lower. Keep in mind that we have 2 p.m. news, so they might just engineer some liquidity for the FOMC meeting with news, but we could always say that. That's why I'm not a fan of, kind of being afraid of news. Some traders are, they always say, oh, we have this and we have that, and I'm not sure if I'm going to trade there, blah, blah, blah. I don't like that. I don't always put orders in front of news. So, like, for example, this 8:30 open, we saw the potential, we talked about it, to sweep sell side and discount if we looked at the dealing range prior to the news release. We had our market structure shift on the 1 and 5 minute right here, bearish order block, volume imbalance, and 1 minute bearish fair value gaps, and we used that to deliver into the sell side. Once we hit that sell side, we immediately push back up into buy side, and from there on we had structure shift after structure shift on the 1 minute, and that's reason number 105 why most of the time it's better to stick to the higher time frame. If you cannot manage to pass a challenge on the 5 minute or 15, probabilities are low that you're gonna pass it using the one, unless you have like superhuman discipline. And most of us are the same, even if we don't want to believe it or agree to it. Most of us have the same difficulties when it comes to trading, because most of it is psychological. Alright, so we closed. Once again, we did manage to close above the 50%, but we opened up with a bullish volume imbalance. We swept buy side. If we take a look on the 1 minute, we barely have a bullish fair value gap to play with. Yeah, we already repriced this entire 930 candle with this wick to the downside. Let's take a quick look at NQ. NQ has left the chat. Almost ready to push above yesterday's high. So NQ is playing out much nicer. We had this SMT divergence. With 830 we picked up some sell side of anyone that got in long, hoping kind of that 830 goes the opposite way and pushes into buy side. Quickly hit their stops, repriced higher, consolidated before the open, and made that push. So based on that, let's see if we can... This is forcing a setup. Just want to say that before I execute. Sort of a Six Sister hypothesis that ES is going to follow what NQ is already doing or has done. Where's the previous day's high? Right here. Let's keep an eye on that. And see how NQ moved here on the lower time frames. If it actually did what we wanted to see on ES. Bullshit. You see that? So on ES, we were looking at this 1 minute bearish fair value gap. We had this drop into internal sell side liquidity, which was located at a discount for higher prices. And then we saw this 1 minute bearish fair value gap. And on ES, you guys remember, we looked at this fair value gap, and if we said if we get a close above, we could potentially run out all these highs. And on NQ, we actually closed above, turning this bearish fair value gap into a inversion fair value gap. And afterwards, we did not invalidate it. We closed here, right at the low of the fair value gap, right here. We didn't close below it, which is harder to do for NQ because it has more decimals compared to ES. And we kept holding it as support, delivered higher, kept on holding it prior to the open, and had our push from it into the previous day's high. Right over here to the left, you guys see that. While on ES, we did the same thing. After closing above it, we closed below it, we pushed back up, push back down, push back up, push back below the slow, shifting structure. We try to go short. Overall more messy compared to what NQ did here. But I don't really trade NQ. I specialize or focus more on ES. And now we have really strong SMT divergence. You can see that ES is really not willing to run. If we go to the 1 minute, did we just leave behind equal highs? Yes. ES didn't even make it above the 930 high, while NQ, relatively speaking, is already moved inside of this area. So a failure to continue higher. Still gonna stick to this paper trade for a little longer. But yeah, note that difference. NQ with a much cleaner delivery today. We do not have it every day. And most of the time, if you trade one asset, you always look at the other one and say, oh, if I would have just traded that one, I would have made much more profit, blah, blah, blah. I prefer to stick to one. I like ES more because, yeah, smaller decimals. Compared to YM, we have 33,000. On NQ, we have 15K. And here on ES, we have 4406. So it's much easier for ES to, let's say, for example, stay inside a bullish fair value gap. Hope that makes sense. Like right here. On NQ, we often see closes below, but it still plays out. So with the precision that I want to, I most of the time see that precision on ES. I tested it on NQ. Sometimes it works, but it doesn't work more times than it does. And it, in the end of the day, it still plays out. So yeah, I don't know, I prefer ES. Move slower. And sometimes you get the clean moves on ES, sometimes on NQ. It's really not random, but kinda. So we swept the previous day's high. We have a 5-minute inefficiency here on NQ. We tapped into that, while ES is still holding inside the range. Didn't leave it yet on a 5-minute indecision. But I'd still expect higher prices if we completely displace and go back below the slow. That's kind of a confirmation, but still I'm not a fan of the price action right now, at least on ES, and I mostly trade ES, only trade ES, so I already get the gut feeling of when the conditions aren't right. And right now they don't seem to be matching up very well. I mean, New York session so far, up, down, up, down, up, down, not really expanding compared to what we saw during London and post-London. Cleaner, like a clean run. We might still get that. like yesterday, where we consolidated until 950 before we got the relief rally to the upside. Let's see, drop down to the 1 minute. Kept on holding this one, that's nice to see. Check out the 15 minute. 15 minute is going to close in 2.5 minutes. 1 hour candle in 15. So let's watch this 5-minute candle closely. Because if we do get that push above the 50%, I think we should be on the right side. While NQ is repricing into the huge 930 inefficiency after having swept external. Yeah, ES is just not willing already yet. Little question for everyone that's watching, just because I'm curious. I mean, I still have my little flaws in trading and I'm aware of them. That's why right now I'm not doing anything on my funded accounts. It's on paper trading only. But I'm curious, what are your biggest obstacles that you are facing right now, or that you have faced in trade on your trading journey so far? Like, was it not being able to stop after you had a green day, or is it just, like, I don't know, your emotions? What's your biggest hurdle? What's holding you back from, what's your mountain holding you back from, yeah, passing these challenges easy peasy and getting your payouts? Because theoretically, if you already put in the time to work out your analysis and all that stuff, then yeah, the only reason you're not funded or haven't had your payout yet is you. Not sure if many people ask themselves these questions, but I'm curious, so let's see. If anyone's open to talk about that, I mean, it's nothing you have to hide. We're all trying to achieve the same goals. Make money independently from a 9 to 5 job, so I think it's important for traders to connect and talk about these things. So if anyone, yeah, wants to talk about that and share it, feel free to do so. I will check the YouTube chat in a few seconds. For me, most recently, after after like, yeah, getting really in tune with the concepts, price action, fair value gaps and all that stuff, PD arrays, and passing my funded accounts very smoothly. If I head over to my bento book, the Apex accounts, where are they? For example, Apex 1 this year. Okay, I added some wrong data to that one. Let's look at the second one. Like, really had no trouble passing all these 50k Apex accounts or the Topstep one. But afterwards, I started hitting a wall, because I felt super confident in my analysis, which led me to believe that I know what the market is going to do 100% of the time. I might come back to this chart on, I don't know, late in the evening and check out what ES is doing. I see a setup during the PM session and I think, oh, all right, okay, I know what the market is up to now. I'm going to engage. And then we hit a week where price actually wasn't that nice. We sort of just chopped for a while, and that ate away some part of the equity that I have on these funded accounts. I managed to get most of it back. I blew one up in the process, but I don't know, this has been my most recent struggling point. What kept me holding back on getting these payouts. So yeah, if I don't see the appropriate setup, I don't execute on my funded and prefer sticking to paper. Because yeah, I don't know what the market is going to do 100% of the time. Afterwards, with hindsight, I can explain it very well and give the narrative to myself and also to the viewers. That's easy peasy. Seeing it live, yeah, it's a work in progress. If you don't, like, I don't know, expose yourself to the risks and dangers, and you're too scared to actually trade on your funded account, then, well, that's your biggest struggle right now. And you have to actually take those trades on your funded account, because just because you're funded doesn't mean you had your payouts yet. So overall, it's, yeah, trading has been and will be a very interesting journey of self-mastery, I think. That's really what it is all about. And that's what makes it so much fun, I think. Not many people understand it. I mean, during the early stages, you often see traders facing these same issues and then trying to avoid them by using algos they purchase somewhere for lots of money on the internet, and then they try to automate it, which is not, yeah, I don't know. Maybe some of you already made that experience, not that profitable, and you're confused. What should I do? Blah, blah, blah. And you maybe ended up with ICT because he promises that he knows how price books and how the algo is coded. He coded it apparently. I think that's total bullshit. Like, come on. That's just my opinion, and I'm allowed to share my opinion, but yeah. The setups and the models kind of work. Not kind of, they work. I mean, I managed to get funded using the concepts, but I'm a strong believer that I made them work, and he didn't invent anything new, like drastically. So nothing groundbreaking. He didn't invent a new wheel or anything. In reality, the 2022 model is a head and shoulder setup, or a inverted head and shoulder setup. The entire context and the language that ICT shared for free on his YouTube channel, that's something else. That's really what, yeah, I don't know, helped me a lot. Because every different system, it's just a different perspective on how to look at the same thing in the end of the day. A support and resistance trader would have their language and say, okay, we have resistance or supply up here. That's why every time we bump into it, we get rejected. Here we have demand, blah, blah, blah. And then they explain this entire chart from a completely different point of view. I really like the language that ICT taught, so I decided to learn it and stick with it. And it's paying off for me. But it doesn't mean that that it's going to work for everyone trying to get started with ICT. And yeah, I don't know, I'm just talking and talking because like price action sucks right now. Looks like we get a pump and dump on NQ. Right here, we swept the previous day's high. Yes. Yeah. Yeah. What can I say? I'm, yeah, more than glad that it's all on paper. Let's get out of that one. We have this massive SMT divergence. So if you're looking forward to engage with a real account, I'd look forward to trade NQ, because NQ had this pump above the previous day's high. That's what you want to see, relatively speaking. NQ is up higher and is about to shift structure. If we break this low right here, getting an entry from a bearish fair value gap somewhere around this area should play out, because we already attacked buy-side liquidity pool. While relatively speaking, compared to ES here, we can't really say that. I mean, ES has still the potential to attack this liquidity pool. It hit this one right here, yes. It failed to continue higher. We're inside this 1 hour bearish, 1 hour 15 5-minute bearish fair value gap, but really it doesn't help us that much. We could continue to range, pick up some stops, and continue back up. While on NQ, that entire picture, higher time frame picture, aligns much more with a short or for a short. So yeah, gonna stay out for now. And let me actually catch up to the YouTube chat here. No, unfortunately no one is open enough to share that. Let's see. But it's okay. We eventually get there. Another question, maybe less personal, regarding the trading progress everyone's making. Where are you guys from? Let's open up TradingView. I'm from Germany. I don't think it's hard to tell. The accent should give it away. I'm not trying to hide it. So I lived in Australia for 3 years, close to 4 years, and that's where I learned most of my English skills. And I think they're just good enough to do these live streams, so that was definitely a win. Alright, so we displaced here. Let's wait for the candle close. Take a look at NQ. NQ is rejecting. This is not the price action that I want to see to engage on my funded. This could change, even though I really would prefer it not to. Let's see. So far, you can't really blame me for not having a great live stream in terms of signals, or I mean, it's not really meant to share signals to live stream. It's more about the trading progress and the analysis and my thoughts throughout the trading session. And yeah, so far, I mean, what do you want? Like, who wants to trade this? I don't. Maybe NQ, but yeah, well, I don't trade NQ. So on NQ, we actually didn't close below the 9:15 a.m. low. We didn't even touch it. We fell short of it by a couple of ticks and rejected here. While on ES, we actually theoretically displaced. We swept buy side, so right here, high, higher low, higher high, lower low. So theoretically, this is a 2022 setup, not the cleanest one. So if we drop down to a 1 minute, you can see that we have already filled this bearish inefficiency. But since we didn't have this explosive push up on ES, I'm really, not interested in it. I think it could still come, maybe with 10 a.m. with the new hourly candle. So taking it, I think it's just not worth the risk. It's a different story compared to yesterday, where we had this 2022 model after a big strong push up. We hit the daily, weekly fair value gap, new week opening gap, standard deviations, blah, 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 blah. I could go on. So that's a different story for me. We are super overextended. We see the distribution already happening up here. All we do is go sideways. We shifted structure right here. I entered off this bearish fair value gap with my stop above here, and I added to the position right here, targeting what? 50% of yesterday's range. I took some profits early on, let the rest run, hit the targets eventually. But yeah, that's different to a potential short right now. We're not really super extended. All we do is, if we are honest, we're inside a box. Big box, but yeah, I mean choppy box. And I'm not the biggest fan of engaging on that. If you try to go short, I don't know. Let's wait for this 5-minute candle to close. Maybe with a bearish fair value gap, this could be a potential entry. Next 5-minute candle is going to be a new hourly. And what's most important, not just a new hourly candle, that's what I personally call a super macro, because the entire macro concept that ICT invented, I think it's bullshit. He just found a nice little name for it. It's the volatility that comes in with a new hourly open. So the theory behind it is that lower time frame traders, they trade and they see a trend, blah, 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 but they kind of most of the time lose track of what's happening on the higher time frame. So with a new hourly opening, hourly traders enter into the market, and depending on what they see, price is going to move more volatile than it did, at, let's say, for example, 2 or 9:30. 9:30 might be worst example I possibly could take, but all I'm trying to say that around this new hourly opening we have more volatility, because most hourly time frame traders enter when the candle is closed and a new candle opens up. And what's happening at 10 a.m., why I'm calling it a super macro, is because we also have a new 4-hour candle opening. So in 40 seconds, we get a new 15-minute candle, a new 1-hour candle, and a new 4-hour candle. The countdown's already ticking, and the current 4-hour candle formed a doji. We have this huge wick to the upside from yesterday here on the 4-hour chart. Let me hide all my drawings. Not sure if we hit the 50%, but I'm pretty sure we did. So yeah, that's gonna be very interesting. So you can expect, or you could expect, more volume to enter the market from 4 and 1 hour time frame traders at 10 a.m. than you would expect it at, for example, 11 a.m. We do not have a new 4-hour candle opening there. So 1 hour down closing candle, rejected off this bearish fair value gap, repriced into a premium. 15-minute dropping now, 5-minute. We have our bearish fair value gap, but we haven't tapped into it yet. So right now, if I turn on my drawings, this is the bearish fair value gap. The only thing that I would consider here, let me look at NQ. NQ now also broke the low, but didn't close below it yet. So if I engage, I'm not jumping into the market. Usually on my funded accounts with a market order, I wait and let the market come towards me. And this would be the trade maybe towards the opening. But it seems that we're just gonna run. Market structure shift on the 1 minute. We took this buy side, and the most recent low after we took that buy side would be this one. We closed below it right at 9:54. We haven't repriced into our 5-minute, but we might do that now. We have sell side below these lows. We already swept that. We talked about that for a little bit of time at the beginning of the stream. And usually if you want to see shorts, you can look at previous bullish fair value gaps that supported price on its move to the upside and see if they're being disrespected, respected, whatsoever. So right now, if we look at price action, we see equal lows with our inefficiency that yet hasn't been filled. So it's worth the paper trade risk for me. Not for my funded accounts. I don't think I will engage anymore today. I secured my bag with this London 2022 model. Could still play out. I won't regret not taking it on my funded. It's not worth the risk for me. But yeah, in Q, pump and dump. Swap the previous day's high, looking much better. We are shifting structure if we close below here in 2 minutes. Tough to get a nice discount entry here. Maybe if we drop it down to the 1 minute. Market structure shift up here. So this is the high, higher low, higher high into the previous day's high. Displacement, we closed below it, but we did not leave behind a bearish fair value gap in this price leg. Not a single one. So this entire delivery has been pretty efficient. Nothing on the 1 minute. The only thing you could potentially enter on would be the breaker block. The lowest down closing candle of our most recent ABC price leg. But we didn't hit that after closing below it. If you drop to, I don't know, I don't want to really do that, but on a 15-second time frame, well, yeah, things start to become more clear. High, we swept buy side. Ready, we look at this low. We displace, we close below. We have this 940 big inefficiency. You would enter right here for the continuation lower. But guys, I'm not a fan of it. I will likely never do that. ICT is looking for content and material. And if you have to drop down to a 15 seconds chart to do it, he's gonna do it. But yeah, I don't know. I recommend to everyone to first practice on higher time frames before going to the 15 seconds. But yeah, you could also argue it's okay because you have your higher time frame narrative. We just swept daily external buy side liquidity. We have our market structure shift. We have our huge fair value gap inefficiency. We reprice into that. And from there off, we continue to sell off. So yeah, it is a clear 2022 YouTube model here on NQ, but it depends on which time frame you're actually looking at. On a 30 seconds time frame, we hit a inefficiency up here, but after that, most of the price action has been priced in efficiently. After we should, yeah, so the only real potential entry would have come either here of the 30 seconds chart, which I would have said it's too much risk because we didn't really have had the displacement yet. Displacement for me would have been this high, this low, higher high, higher low, higher high. I wouldn't really count any of this. Displays close below it, and the entry only came on the 15 second. It's alright, you do not have to be in every trade. If most traders would sit on their hands 50% of the time where they're trying to look for an entry, they likely might actually end up profitable. Let's see how this short is playing out. Paper trade, bearish fair value gap. Once again, we kept on holding or respecting this old bullish fair value gap with the candle bodies. Repricing into our 5-minute inefficiency. So yeah, let's see. Paper trade won't hurt us. copy. There we go. Alright. Keep an eye on NQ at the same time. So far we're rejecting of our bearish inefficiency. Sell side below these two equal lows and this low. Looking good. But it looked good a couple of times already, so within this range we are still inside the... okay, we expanded above it with wicks, so don't really count that. Let's see. I'm gonna go to the toilet real quickly. I will be back. Maybe with our profit target hit. 5-minute chart rules. Nope, not yet. Alright, I'm back. See how we do here. 15 seconds until candle close. Let me check the YouTube comments so I'm not sleeping or missing anything. Nothing new. Oh. And once again, a failure to close in A, bullish volume imbalance here, B, to close below this bullish fair value gap. I think if we break this level, we could really take it lower here. Let's place one bearish fair value gap. Swept high, close below this one. Peak at NQ. Pushing to the upside. Closing it for now. Alright, so we continue lower. Trade seems to be playing out. Nice reaction of this bearish fair value gap. This is the only trade that I really would have considered taking on my funded. Yet I don't really regret not taking it. Really, it just didn't work for me with this chop. 10 a.m. SilverBullet setup, 11 a.m. 10 between 10 and 11 to clear sell side. So we have now taken out these equal lows right here. Bum, 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 bum. 1 pixel. And next target would be this low right here towards the New York midnight level. I'm going to trail my stop loss above this short-term high. We finally seem to be closing below this bullish fair value gap that kept holding us for so long. Here, and then we luckily got our retracement into the inefficiency. Displacing through these two equal lows. And let's see if we can also hit this low. And yeah, that would have been a nice little setup. If I'd be shitting all of you guys right now, like, I don't know, fooling you, I'd say, yeah, I entered short on my phone with my funded accounts and actually made that profit, but like, come on. That wouldn't be me. Where's the point in doing that? I took it on paper. It's practice day for me today. I'm fine with that, so I struggle with calling this a clean 2022 setup, so yeah, no, I'm not calling it clean. We didn't have the proper push above. We have that bearish SMT with NQ. Yes, really didn't push at all, got rejected from our 1 hour 5 minute bearish fair value gap here, hit the 50%, displaced lower. So yeah, in a sense, clean, but also not that much. So yeah, I prefer staying out. We closed right on the midnight level, no wick or nothing below. Nice. We have this unfilled bullish fair value gap right here, so let's see what we do around this level. We haven't hit the opening yet, that's my next target, but really we can place it on the London sell side and let this little fella run. Did anyone take this short? Be curious to know. Open chat. Ragnar, cool. Did anyone take that short of this 5 minute bearish, the 2022 model? Maybe even just on paper, doesn't matter or on paper or not. I only took it on paper. I don't make a big scene out of it. NQ is really holding up here. While ES is on its path to clear more internal sell side, NQ is still holding up in here. Remember, this is our 1 minute inversion fair value gap. NQ is still inside that, while ES cleared these lows. But yeah, relatively speaking, it was much easier to get down to that level for ES because ES didn't pump above the previous day's high. Let me check YouTube. Quick scalp. Nice. That's how we like it. A quick scalp. Based on the 1 minute. Yeah, maybe the bearish fair value gap right here. Maybe. Yeah, but I'm content. Let's see if we actually want to continue lower. We get a new fair value gap likely, unless we do immediate rebalancing. And if you heard me saying that for the first time, what is immediate rebalance? So we had a strong bearish candle here to the downside. And we have potential to leave behind a bearish fair value gap here. And when I'm saying immediate rebalance, I'm referencing, I will make a video about that too very soon. I'm talking about that this candle or this candle's wick is already repricing this entire bearish candle for it to, yeah, basically not leave behind a potential bearish fair value gap. And if we do that on the very same candle, that for me is immediate rebalance. So this candle, if this wick would look like I draw it in right now, would have immediately delivered price efficiently and filled all the left behind inefficiencies of this really bearish candle with no wick to the downside. That's what I call immediate rebalance. So right here, we didn't do that and we left behind this bullish fair value gap. If we would have done exactly that, that would have been even more reason to believe that we are going to sell off, because in this scenario we wouldn't have left behind a bearish fair value gap to enter on afterwards like we did right here. This is immediate rebalance. Let me see if I find a example, a good one. I don't think I will find it today. No, we left that open. No chance here. Nothing here. No. No good example today so far. Take a look at NQ here. So NQ still failing to displace lower. And right now, like we talked about, we have this bearish fair value gap here. So for me to remain in my short, I want to see this bearish fair value gap to actually be respected. If we have get a strong push back through and above it, that's not looking good for shorts. Then we would have bullish SMT now with NQ. We're talking about these two relative lows, which could fuel this delayed push to the upside into the previous day's high, maybe on ES. Because by the looks of it, we filled in the entire regular trading hours opening gap. And now it might be time to push back up. The low of the day might have been already locked in this scenario. We can check that out on a 1 minute time frame. 1 minute, bump, 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 bump. Didn't really sweep that slow, then I would consider it a market structure shift. So now for right now, we still expect this bearish fair value gap to hold or act as resistance. How many points is it to the midnight level? Let's see. Live stream, 5 viewers, 8 viewers, nice. I mean, now, yeah, it's not me. I'm not here to give you signals. I'm just sharing my thoughts and analysis. Signals I only do during the London session. Today we had, okay, we're rejecting from our bearish fair value gap just as we would expect it. So I'm going to remain in this trade for now. Signals I only do on Discord for our VIP members. Like for example this morning. Gotta do some self-advertising. No one else is gonna do it. So yeah. Right here, where do we have it? Trade ideas. This morning I talked about the London 2022 model right here. So 30 minutes before the London Open, I pointed out that we could see a potential 2022 model. And once we broke structure, I kept everyone up to date with my limit orders set. Asia buy side, 5 points. Very straightforward. And then train likely left the station with orders. But luckily, thanks to the New London Open at 3 a.m. New York local time, which is 9 a.m. my local time, filled, hit the first take profit target, and then unfortunately, because it hit my first take profit target, it came back and silly me trailed the stop loss to the high of this fair value gap. I don't really know why. That's the job for the task force Saturday to narrow down my execution mistakes from this week to get an answer to that question. And it continued to run to the 10-point target. So it played out really well here. And then afterwards, I mentioned the short, bearish market structure shift, once again with my limits. And we got filled again. I mentioned partials at all these lows right here. We hit these lows, but we had a failure to display slower. And then we had this bullish volume imbalance back above the midnight. So we took that last low, hit the sell side. I mentioned that, I'm going to cut some risk and book some profits. And right here with this volume imbalance back above midnight, I mentioned that I'm closing my position, not interested in holding it anymore. And we pushed through back into our bearish fair value gap. And if you remember, earlier we talked about NQ here, because NQ at this point in time actually cleared the low that ES put in place at 2 a.m. So we had bullish SMT, and then right here, where was it? I called out the inversion fair value gap long. It was a 50-50 higher risk play. I made sure I'm making everyone aware of that right here. Close above the bearish fair value gap, we can target longs, higher risk. So very straightforward, not hiding anything. This would have been my limit order. I personally didn't take it. Outside the kill zone, I already booked my profits with the long and small profits with the short. Yet we closed above it. I mentioned the targets, partial at 5 points and 4404 final target. We hit the 5-point partial, and eventually we also hit the 4404 level. Played out really well, and one of our members actually managed to pass his Apex funded account in less than 7 days. It's not bad, it's good effort, like really grats to Fresky here. And yeah, he bought it with the 90% discount and started taking the signals. Yeah, initially a little bit in drawdown, but then first 2022 model and not a loss. And yeah, eventually he made it to even $300 or $400 above the profit target for the Apex funded account. But yeah, this is just me talking about this. So this is only for the VIP Patreon members of the accumulation zone. So if you're interested in joining that and being able to watch the YouTube live streams without ads and without a delay and priority message support and all that, feel free to check it out. Link for that is in the description. And yeah, I also share my weekly outlook here, trade ideas. I have a Learn ICT Concept section here with an entire thread about breaker blocks and all that kind of stuff. Awesome indicators for ICT concepts. So yeah, if you guys are interested, feel free to send me a message on Discord or simply check out the link in the description. Let's get back to our chart. Because what did we do? So we rejected from our bearish fair value gap. We're still inside this bullish fair value gap right here, but we open up with a nice little volume imbalance to the downside. Ticked our bearish fair value gap one more time. So this would be a continuation entry into more sell side, if you want to. I'm not a fan of these continuation entries because if my initial entry came in here and I add a contract right here, my average entry will be trailed to this exact price level. And I don't like the netting account. I used to trade CFDs before where you have two separate positions, and I really enjoyed doing that. I don't know. It's a lot better because you can, let's say, for example, close this trade out once you hit your, let's say, open, and you can still let the other trade run, which I think is much better because if I would be in two contracts right now, I can give you an example. All right, let's do it. I'm going to sell one more time, so now I have an average entry. If I want to get out of one contract now, I cannot decide if I want to get out of my entry up here or my entry down here. So if I get out of my short with buying, let's see, let it continue lower a little bit. This is, yeah, for educational purpose here. Let's say I buy one, but I initially wanted to get out of this short I entered down here, and now I'm left behind with a sucky position. If my entry would have still been up here, I wouldn't, worry about it, like I could let it run. But now, because I booked some partials and I entered again, it's always closing the position from experience with the biggest profit or the contract, the entry. I don't like that. I would love to be able to choose which entry I actually want to exit. So let's assume right here I made a mistake. I actually wanted to book my profit by buying instead of selling. And now you're in with two. You still want to get out because you think it's not going to go lower. And now you're left with this sucky position here, right? Like you entered up here, and with that little mistake, now your entry is down here, and yeah, trade's not looking that good anymore. That's what I really don't like about it. But well, I think we gotta live with that. Gotta be really. I have to be really confident if I add two positions. I normally don't, and much rather enter with bigger size. So NQ is still holding this initial 1 minute inversion fair value gap. We haven't left it yet. Didn't clear the 8:30 a.m. PPI news low. It is 10:30. 15 minutes. We have a 15-minute bearish fair value gap above us that we could fill before we maybe continue lower. If we check the 1 hour, reprice lower. Keep in mind that we filled the entire regular trading hours opening gap. Right here, closed yesterday. We filled that in completely. We have equal lows below. Let's see. So now I'm left with this sucky position because I showed it to everyone on stream what I don't like about the Apex or futures funding accounts with the, like pretty much with every futures funded account, unless you have a hedging account. But to get a hedging account, I don't know how you would do that. Does any prop firm offer a hedging account for futures? Or do you have to, I don't know, sign up with IBKR or, I don't know, AMP futures and have lots of money to get a hedging account for futures? With CFDs, it's normal. Be able to enter two positions at the same time without them, like, yeah, interfering each other. I like that. I prefer that. Let me check, maybe someone on YouTube knows the answer. Well, doesn't look like it. Who really knows? Alright guys, but unless you have any more questions for me, I think I'm going to end the stream. I've been streaming since 8 AM, so that's getting closer and closer to that 3-hour mark. Price is not really willing to move big time. I mean, we cut this short. That's 8 points to the New York midnight level, and this bullish fair value gap. I'm going to close this trade right here. We took the short. That's fine. The idea played out. That's all we wanted to see, really. Let me get rid of these inefficiencies here. We swept that sell side. We had our market structure shift. As long as we still hold this 5-minute bearish fair value gap, I think the probability is still higher that we continue further to the downside. If we start to close above and invalidate it, and we see now prices supporting this inversion fair value gap by then, I could see it continuing back to the upside, because really getting back above all this, it's not going to be super hard. I mean, it's barely a range. It's only 18 points for a New York AM session. That's usually nothing if you compare it to yesterday and Monday, a bank holiday. So yeah, it's not really that much. And yeah, so this would be my area of invalidation for shorts and a early sign for longs, really. Because we have that bullish SMT divergence and Q didn't clear this low. And ES hasn't had that push towards the previous day's high yet. Keep in mind that we have FOMC news at 2 PM New York local time, and we could just end up staying inside the range. Maybe we expand to the downside if the bearish fair value gap keeps on holding up and we continue lower from here. But overall, I don't know, I recommend you guys to sit on your hands. There will be better trading conditions than today. I'm 99% sure of it. If you secured some profits already, like maybe with the short that we took, then be content with that and call it a day, or switch over to paper trading. Nothing really clear here. NQ, can see NQ really doesn't want to continue lower. Every time we push lower, we get a push back up. Maybe it's just waiting for the right time, like right now, who knows. But overall, yeah, still bearish bias until we break above this bearish fair value gap. I would make it a if-then scenario. So as long as we hold resistance here and we continue to deliver lower, bearish. If we close above and see support, so early signs for bullish order flow, not respecting bearish PD arrays, closing above them, holding support on them now on the inversion, checking the lower time frames, leaving behind more bullish fair value gaps, then yes, we could look forward to maybe flip our bias because we filled the regular trading hours opening gap. Maybe London has put in place the low of the day and we continue to go back up towards the previous day's high. So those two scenarios I could see playing out. I will see what's going to happen if I get back to the charts later on. So unless you guys have any questions, let me check the Discord first. Open chat. Nope, doesn't look like it. Let's check out YouTube. Any questions here on YouTube? Feel free to ask. I'm not gonna bite. Nice. So for the continuation lower, we would really prefer a final close below the midnight level. This is a new 15-minute candle. And see what we did here? We talked about this. We saw the 15-minute bearish fair value gap. We repriced into that one as well now. And it was overlapping with our 5-minute bearish fair value gap. So if we now finally get to close below the midnight level, I think the short should be safe to continue lower towards the opening of the daily candle, the sell side, and eventually the London session low. All right, but if we don't and we reject again after sweeping these equal lows, yeah, maybe. But like said, if we close above and see signs of early bullish order flow, then we could expect a continuation up higher, up. But until then, get the bullish bias out of your mind for now. Trend is bearish. NQ is choppy. Not really interested in that. Could be forming a head and shoulder setup. Left shoulder, head, right shoulder. But yeah, this is the 2022 model or the 2022 model. The SilverBullet continuation entry into sell side for me would be this bearish fair value gap. I'm not feeling like I'm taking any live trades today anymore. I secured my profits during London. I'm content with that. Let's see. Any questions? No worries, as enough. Everyone's very welcome here. I will be streaming again tomorrow. Tomorrow we have CPI news, and I won't trade live during that either. So that's okay with me. I made my profits for this week so far. Maybe on Friday we will see. The Apex 150k, yeah, is up with less trading days compared to what I made last week, so that's an indication for a good week. So far, no red losing days. Couldn't be better. Why mess it up on a lower? That's comedy. One bullish volume imbalance still inside this bearish value gap, but like said, until we don't close above it and magically hold support there, see early signs for bullish order flow, maybe on the 1 minute. Let's check that before I go. No, not really. We still have these equal lows. If we would have swept these equal lows with this candle flow, yeah, maybe. But right now we're just going sideways. That might be reaccumulation for shorts or actually accumulation for longs, since we have filled in the entire regular trading hours opening gap right here. And yeah, NQ really starting to push back to the upside. Still holding. Want to point that out before I end this little live stream. Little long. This 830 inversion fair value gap. We closed above it once, and from there on we kept holding support until right now. So that's 2 hours. Kept holding support in this little, yeah, inversion fair value gap. So that's really interesting to me. Yet I don't trade NQ. We will see. So until we close above it and hold support, could target buy side right here and those two equal highs right here. And if we can really make that run, maybe the previous day's high. But we could also just end up continuing to range until we hit 2 p.m. FOMC minutes news. So keep that in mind. Tomorrow we have CPI. Also keep that in mind. We already had a major expansion on Monday, Tuesday. All signs for less probability trading conditions or lower probability trading conditions for Wednesday, the day before CPI. But yeah, let's see. All right, guys. Let me check one more time for questions. I gave everyone enough time. Okay, how impactful is FOMC minutes versus when the Fed chair is speaking? So that really much depends on the time. So if you look at Forex Factory closely, last week we had Powell speaking, but it wasn't a FOMC press conference. It was only he only spoke at a university, I think Colorado or something, if I'm not completely wrong. And he's not gonna talk about something game changing here that's having an impact on the nationwide interest rate. So only when he's like, I don't know, giving a speech right after FOMC or before the Rio FOMC event that's gonna come early November. The FOMC meeting minutes, it's a news event where they basically meet again after a couple of weeks, months after the most recent FOMC news event. So the most recent one was, I think, in September, during September. So now during the meeting minutes news event, they meet again and they discuss, okay, how did our last recent interest rate decision, where they hiked the interest rate, I think, they discuss it, see how much of an impact it had on the overall inflation, blah, blah, blah. They discuss about that, maybe plan a little bit already for what they're going to do in November for the FOMC news event. So overall, the FOMC meeting minutes actually has I'd say a bigger impact because it's less frequent than Powell actually speaking. And sometimes Powell is just speaking at a university about some stuff, blah, 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 where he's not going to drop a bomb on the market. It's just him, like, I don't know, giving a graduation speech or something. So, yeah. 3 weeks after the federal funds rate is announced. It's a detailed record of the FOMC most recent meeting, providing in-depth insights into the economic and financial conditions that influence their vote on where to set interest rates. So, yeah, it's going to influence their vote on where they're going to set interest rates during November. So yeah, that'd be important for me. More important than him just talking without any FOMC news ahead or just recent FOMC news. I hope that answered your question. And yeah, you can't quantify how impactful it's going to be. It's just healthy to assume that it's going to have an impact, especially FOMC, where they decide the interest rate, which is going to have a rather big effect on the economy itself. So yeah, most of the time, it just depends on the setup overall. But yeah, my eyes are on the CPI news report as the biggest news event that we're going to get this week. PPI was nice, but eventually just a news driver to deliver into sell side. Right here we see it on the chart. We dropped during CPI into internal sell side liquidity to power the move back up, liquidate some early longs from the London session before actually pushing price back up into a premium. So most of the time these news are just a driver for the setups that we already see or have on our chart. But yeah, it depends on the general market conditions. Sometimes you might also see me positioning myself ahead of the 8:30 news, but I don't do that every time, only when I have very, very high confidence in that trade as well. I think I took one not last Friday, but the Friday 2 weeks ago on stream as well. It's all on YouTube if you want to look for it. It certainly was on a Friday where we had, I don't remember the news event we had. Maybe also Powell speaking, but yeah. Let me skip those ads. Alright guys, thanks very much for sitting in here with me. I will be back tomorrow and on Friday, starting from 8 AM. If not, I will announce it on the YouTube channel or on my Discord server. If you want to, join the Patreon to get access to all the trade ideas, the weekly outlook, and the overall VIP section on the Discord. The link for that is in the description box below. You can also get a free trial for that for the live stream pass. If not, I will keep on streaming for free here on YouTube, but with the delayed stream and the advertising on. Alright guys, take care, make sure to not blow your accounts during unfavorable conditions, and nice, we actually continued lower from this bearish fair value gap. So right now, still have our bearish bias. It was a little bit tough to sit through it, but I think eventually we will hit our next sell side targets right here and right here, if we close below the midnight level. If we now get a push back above, I'd scratch that idea. But right now we're looking really good. NQ is also looking better again now. But yeah, all from our entry of this bearish fair value gap. And I think that's a good place to end the stream. Nice to see PD arrays actually being respected. Alright guys, that's gonna be it for me. Take care and enjoy the rest of your day. And I will see you again tomorrow. Bye.